Welcome back to the Daily Stack. Today, it's September 26th, 2025. This show is not financial advice. If it were, I'd already be standing in your driveway with a cardboard sign that says, "Will work for exit liquidity." Today's rundown has three stories. The whales pulling their chips out of the Bitcoin ETFs just as the quarterly options cleanup hits, the SEC sniffing around some suspiciously well-timed trades, and the one altcoin that showed up to a funeral wearing a disco suit. ASTER. Let's stack it.
Early days, the wild frontier. No maps, just minds of seers. Code in the dark, whispers in ears. Future shaped by pioneers. Digital gold from the ashes birth. Alchemy of the cyber earth. Flames lit the path, a new rebirth. No king, no crown, just a people's worth.
So we're seeing Bitcoin dip below that $110,000 level today. Other cryptocurrencies like Solana's Sol token are also in the red. What do you think is driving the sell-off?
I think part of it is we're seeing some trouble in the DATs, the digital asset treasuries. And I think part of that is there was this view that they were somehow going to trade at a premium to their net asset value. If you think about it, they really are just a vehicle for getting access to those tokens, sometimes with leverage, which does carry additional risk, of course, but ultimately it is still a pass-through. And I think bringing them closer to NAVs actually makes a lot of sense. And some of that euphoria going out, I think, is partially what's going on. We also have seen some other liquidations across Bitcoin, especially. And I think that's just part of normal market behavior, especially for an asset class with this much volatility.
Think of the crypto market as a Vegas blackjack table. All week it's been noisy, but friendly. Chips sliding across the felt, everyone riding the hot shoe. Then the player with the biggest stack suddenly stands up, tips the dealer, and cashes out. That's exactly what happened when the US spot Bitcoin ETFs yanked out about $258 million yesterday. The largest single-day outflow in weeks. That steady Wall Street buying pressure that's been propping up prices just walked out of the room. Now layer on the quarterly options expiry, and billions of Bitcoin and Ether contracts are settling today. Imagine the pit boss shouting, "All side bets close now." Dealers scramble to square up their books, hedges fly, and the price wobbles like a drunk on a Segway. You don't need to know delta or gamma to get it. When big investors cash out while billions in contracts are being unwound, the buy walls thin out and the swings get wilder. Who knew before the news? While the market wrestles with that, the SEC and FINRA have gone full CSI. Wall Street. They're investigating strange surges in activity mid-cap stocks that happened just hours before those companies announced they were adding Bitcoin to their treasuries. Picture a classroom where everyone's been pulling C's all semester and suddenly 3 kids ace the test the day the teacher accidentally leaves the answer key in the copy room. Those trades lit up the tape first. The press release came later. The regulators think someone whispered the answers early. This matters because corporate Bitcoin buys have been headline rockets since the MicroStrategy era.
I'm in different camps. So you've got BitMine Immersion, that's Tom Lee's vehicle, but then you also have an OG like Strategy. Are there winners and losers within the DAT trade?
I think it's going to get fairly commoditized. And, it's almost like whenever we have something new, I think about something totally different, the AI trade, right? We used to really talk about foundational models from Gemini and Llama from Meta and Claude. And the reality is they're all a little different. But, when we use AI tools internally at Franklin, we generally find them fairly interchangeable. DATs are even more simplistic, where some will use different ways of accessing leverage. Some will have marginally better parameters that are obviously going to be treasuries of different tokens and different token portfolios. But broadly speaking, it should be a fairly commoditized play. And I think part of that washing out and normalization is actually really healthy for the space.
If the probe finds leaks, expect tighter disclosure rules and maybe even temporary trading halts when the next company decides to go all in on Bitcoin.
I think with digital assets, we should see more coordination between the SEC and CFTC. That should be really positive. We should see greater regulatory clarity, especially on multi-token portfolios and ETFs coming out. That's going to be a tremendous positive impact as well. We've already seen just how much demand there is in TradFi to get access to digital assets through traditional rails. And I think broadly, as we have monetary easing from the Fed and pair that with kind of a beginning of a secular de-dollarization trend, all of that is going to send at least the marginal dollar into blockchain-enabled assets. And I think that's really good for the crypto segment.
For now, it just adds more drama to a market that's already edgy. Now let's cover our spotlight story, ASTER, the disco ball at the wake. While Bitcoin and Ethereum look like they just lost a bar fight, ASTER has been strutting through the door like it owns the club. Its open interest jumped from roughly $3.7 million to more than $1.2 billion in the last few days. That sort of growth is like a good food truck suddenly becoming a national food chain overnight. At one point, its 24-hour perpetual trading volume hit around $24 billion, briefly out-trading Hyperliquid, which is the equivalent of a neighborhood diner outselling McDonald's for a day. Its total value also ballooned about $1.8 billion, rocket fuel for liquidity. The marketing push has been just as loud. CoinMarketCap's launch program plastered ASTER banners across apps and dashboards like a crypto Times Square, while backing from BNB Chain and YZI Labs gave it the mix of mentor and hype man that smaller projects rarely get. Then came a celebrity cameo. Wallet's link to Mr. Beast reportedly scooped up over $1 million worth of ASTER last week, enough to light up DGen Twitter like a fireworks show. It hasn't all been smooth. A glitch in ASTER's XPL perpetual contract briefly shot its price way above competing markets. Think of it as a roller coaster that forgot to brake on the downhill. The team says they compensated traders who got burned, but it rattled nerves. And after peaking nearly $2.43, ASTER slid about 10% in a few hours as early whales started to take profits. The classic after-party hangover. So the pump was powered by a full-on marketing blitz, a surge of liquidity, a celebrity spark, and a bit of technical drama on the side. Let's wrap things up. That's today's market. Whales cashing in their chips, contracts unwinding, regulators sniffing for leaks, and one flashy mid-cap dancing around the tables. Which brings us to the tip of the day. Before chasing any shiny mover like ASTER, check whether trading volume and liquidity really back the price action. A genuine rotation brings deep pools that can hold the gains. A thin pump pops as soon as the music stops. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. So stack smart, stack daily, and I'll see you DGens tomorrow.
No bank